Hey guys, it is Julie here with TipRanks, and today we're taking a look at BTIG's top tech stock picks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. BTIG just released their list of stocks that are their top picks for the second half of 2023. So we're going to be taking a look at the global financial services firm's top stocks in the technology sector. We'll take a look at what these companies do and of course how the other analysts on Wall Street weigh in as well. Don't forget to download the TipRanks mobile app so you can access all of your favorite research tools on the go by following the link in the description down below. Now let's jump right into these tech stocks. First up, we're looking at Mercado Libre. Their stock trades under the ticker MELI and is currently priced at over $1,168 per share, so pretty pricey there. Of course, fractional shares always an option, and the stock has seen some impressive growth. They're currently up 61% in the last year and 29% in the last 6 months, but have been cooling off lately, down 7% in the last 3. Mercado Libre is one of the largest online commerce platform and payment ecosystems across Latin America. The company provides users a mechanism for buying, selling, and paying, as well as collecting, generating leads, and comparing lists through e-commerce transactions. They have operations across 18 different countries, including Argentina, Brazil, Mexico, Colombia, Chile, Venezuela, and Peru. Every second, they have over 600 visits, 231 transactions, and 40 purchases, with over $3 billion in total revenue. They came out with a huge earnings beat in their last quarter at the start of May, and the next results will be due soon on August 9th. For their Q1, they reported earnings per share of $3.97, coming in $1.18 ahead of analyst expectations, and net revenues of that $3 billion was up 58% year over year. Taking a look at BTIG's commentary on the Mercado Libre stock, they note that they have gained a big e-commerce market share in Brazil. They say they are expected to benefit from growth in lending, ad revenue, and fulfillment service monetization, supporting EBITDA growth. Additionally, anticipated rate cuts by the Brazilian central bank in the next 6 months could boost customer spending and enhance stock sentiment. BTIG's most recent price target comes in at $1,600, which would be growth potential of 37% for the next year. And it seems other analysts agree, as the Mercado Libre stock currently has 7 unanimous buys. The average price target comes in over $1,600 actually at $1,622. That would be upside of 38% from current prices. The most recent ratings coming in a couple weeks ago, also at that $1,600 price target. Another one of BTIG's tech stock picks is CrowdStrike. Their stock trades under the ticker CRWD, currently priced at $145 per share. Now, the stock is down 23% over this past year, taking a big dip here near the end of 2022. But in the last 6 months, they seem to be recovering as they're up 50%. CrowdStrike is a cybersecurity software company. They are the pioneer of cloud-delivered endpoint protection. Their CrowdStrike Falcon has revolutionized endpoint security by being the first and only solution to unify next-gen antivirus, endpoint detection and response, and a 24/7 threat hunting service, all delivered via a single lightweight agent. Their Q1 earnings report came out on May 31st, where not only they had an earnings beat, but they also saw record revenue. CrowdStrike reported Q1 earnings per share of 57 cents, coming in 6 cents ahead of analyst expectations and continuing a long streak of earnings beats. On the revenue side, it came in at $692 million, and that was a 42% increase. BTIG maintains CrowdStrike as one of their top large cap picks for the second half of the year, as they maintain a large position in their sector. They note their high win rates against rivals like Microsoft, strong customer recognition, and successful performance in emerging product categories. And despite concerns about the competitive environment, they expect that they'll exceed street estimates in fiscal 2024, driven by their established emerging product portfolio and successful entry into new markets. The firm's latest price target on the CrowdStrike stock is $188, and that would be an upside of 29% for the next 12 months. And once again, it seems that Wall Street agrees, as there are currently 29 analyst ratings coming in as a strong buy. Those ratings break down to 27 buys and 2 holds. The average price target of $178 would be an upside of 22%. And we can see some highly ranked analysts weighing in the last few weeks, with upsides ranging from 16 all the way to 37%. And last but not least, we are looking at DraftKings. Trading under the ticker DKNG, their stock is priced at $26.49, and this is another stock that has seen some notable growth. They're up 102% over the past year and 119% in just the last 6 months. DraftKings is the online home of fantasy sports and sports betting. A leader in their industry, the company allows users to enter daily and weekly fantasy sports-related contests and win money based on individual player performances in 5 major American sports, including the MLB, NHL, NFL, NBA, and PGA. Their DraftKings Sportsbooks also allows users to do live betting, where they can wager on the vast majority of teams, sports, and events in real time. While the sports betting platform is not yet profitable, they did come in with a smaller than expected loss in their last quarterly report near the start of May. For their first quarter, they reported a loss per share of 87 cents, which was 1 cent better than analysts had been anticipating. Revenue came in at $770 million, which was an increase of 84% year over year. It is also speculated that they are headed towards profitability by the end of 2023, with their CEO stating that they are confident DraftKings is well positioned to achieve profitability on an adjusted EBITDA basis in the near term and deliver long-term value for our shareholders. BTIG expects DraftKings to benefit from favorable fundamentals in 2023, including product improvements, increasing parlay mix, a positive operating backdrop, and improved efficiency, which could drive significant upside in estimates and positive revisions. They say that DraftKings is currently preferred due to their stronger performance potential and competitive narrowing. The firm's most recent price target on the stock comes in at $31, and that would be a growth potential of 17% for the next year. Now, the DraftKings stock does have 27 analyst ratings altogether, but opinions are slightly more mixed as it does come in as a moderate buy. Those 27 ratings break down to 17 buys, 8 holds, and 2 sells. The average price target of $28 would be an upside potential of nearly 8%. Looking at our most recent ratings, just in the last couple of days, we have a hold, a sell, and a buy with some very differing price targets. One is a downside of 24% compared to an upside of 35%, so a lot of varying opinions on the DraftKings stock. So there are 3 tech stocks favored by BTIG for the remainder of the year. Now, these companies have all seen some very notable growth in the last 6 months, but analysts do seem to think there's more room for growth. Let me know your thoughts in the comments down below if you think there's more upside potential ahead. I always love hearing from you guys. Don't forget, these videos are never a suggestion to buy or sell any specific stock, just sharing with you what those Wall Street analysts are up to and providing some information and entertainment. Make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of today's video, hit that thumbs up button and make sure you're subscribed as well. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.